Many homeowners who find themselves in financial crisis consider second mortgages to attain immediate funding. Second mortgages are a refinancing alternative. Obtaining a second loan is a way to restructure and consolidate debt. The borrower should always carefully consider all options before committing to a second loan. Second mortgages allow the borrower to access the home's additional equity. The property secured by the primary mortgage also secures the second mortgage. In the event of a default, any lender can place the property in power of sale. However, second mortgages are considered a higher risk for lenders than those of the first mortgage. Therefore, when and if a default occurs, the first mortgage takes precedence over the second mortgage. This typically results in higher interest rates on a second mortgage. Although second mortgages are considered to be more of a risk than first-time loans, the risk is still less than those of credit cards. In turn, the interest rates are also typically lower than the interest rates on credit cards. There are some disadvantages when obtaining second mortgages. The main disadvantage is that the borrower is putting their home at risk by attaining one. If the borrower becomes unable to make payments, a second mortgage can be catastrophic. Second mortgages also usually have hefty second mortgage fees. These fees often depend on how much funding the borrower wants to access and how long it will take to pay off the loan. For this reason, it is imperative that the borrower understand and weighs all risks before committing to a final contract agreement. By ensuring that the payment on the second mortgage will still be affordable even with higher rates, borrowers will greatly reduce the concern for a default and the consequences that follow. This will also give the borrower's budget adequate room for small changes in income. When a homeowner is looking to attain a second mortgage, the best place to start is with the lender of the first. By doing this, it is likely that the borrower can save money on fees and interest rates. The lender is able to look at past payment history of the primary loan. If the borrower has made payments each month and in a timely manner, this shows that the borrower is less of a risk and the lender may reduce some of the fees. In attaining second mortgages, getting all necessary information to make an informed decision is the best approach.